Generative AI could help banks make an extra $340 billion a year just by making things run more efficiently. To know more about this, let's hear it from Nitin Sharma from IBM Consulting, Janet Tang from Alex Partners, and Priyanka Shukla from Gartner. Glad to have everyone here today. Now, what is happening in banks' generative AI investments? Go ahead, Priyanka.
Well, Gen AI is undoubtedly one of the top focus areas in banking, but banks are moving forward with controlled enthusiasm, right? So compared to other industries, banking is somewhere in the middle of the pack when it comes to Gen AI deployment, and it makes sense, right, given the highly regulated nature of the industry. But we do see a heightened pace of Gen AI deployment. Like last year, only 5% of global banks had deployed Gen AI, but recent Gartner survey shows that 75% of banking CIOs globally plan to deploy Gen AI by 2025. Most banking leaders are investing in internal facing use cases like operations, code generation, frontline or branch assistance.
Yeah, I think very similar to what Priyanka is saying. I mean, we did a study with 600 executives across the globe with different banks through our IBV, IBM Business Value Institute, and found out that 80% of the banks are doing something in Gen AI. Either they are experimenting or they are scaling out. Now, surprisingly, or not surprisingly, rather, 8% of this 80% banks are trying to scale out the Gen AI implementations that they have experimented with. We see three, four areas where banks are really investing. One is, of course, the customer engagement and front office with their customer service. The other big area that we are seeing is, which is very important also now, is the software development lifecycle, leveraging Gen AI for software development as well as IT operations to drive the necessary productivity that the technology promises to. And then the third area that we see is around the middle and the back office operations involving the workforce productivity and experience transformation, be it content generation, summarization, or search to automate and drive the necessary productivity to reduce the cost to income ratios and increase the ROE for the banks.
Now, just a follow up on that, going back to Priyanka, how much have they spent so far?
According to our survey data, we've seen that this year, leaders globally plan to allocate about 6.5% of their functional budget to Gen AI. And banking, 90% of CIOs say that they will increase spending on Gen AI next year, that is in 2025, and expect their spending to increase approximately or on average by 39% next year, right, compared to this year. So we see that spending is definitely increasing, but as Nitin said, that it is tied to organizational maturity. And currently the maturity is relatively low compared to the hype and market interest that there is in AI technologies. So as the organizational maturity increases, the share of Gen AI in overall AI software spend will increase from about 8% in 2023 to 35% in 2027. So that is a massive jump in the share of Gen AI spending when you compare it to the overall AI software spend.
So, how can banks mitigate the risks of over-investing in AI? Janet?
Study actually finds that more than 80% of AI projects did fail. And the top three reasons for such a failure are one, the misalignment of goals, and secondly, poor execution, and thirdly, the cultural barriers. Banks are not very specific in terms of overinvestment. In order to actually make sure that the results, the return are justified, we actually suggest that it's very crucial for example, the alignment of the goals between the business and the strategy to also handhold your stakeholder during the whole change management. It is also very critical during the process of AI implementation for the management team, for the executives to have a very clear visibility into the progress and track key indicators that measure the return, the impact, either on the revenue or on the bottom line. And if it happens that the progress stops or the results, the milestone you've seen are not really meeting the objective, we recommended the banks to quickly identify and terminate the projects right away and have a discussion on how to iterate, how to revise the portfolio under the next project.
See, the top GenAI risks that banking leaders are worried about that we are hearing is risk of misuse, privacy concerns, or what employees feel about its impact on their job role, right? So risk of overinvesting is not something that we have come across. I think they may feel that they're overinvesting if they don't get the desired outcomes, right? So the hype can lead to misplaced expectations where you overestimate the impact and underestimate the complexity, particularly the regulatory burden and how the costs are going to escalate as the projects move from pilot to the production stage. So it is the selection of wrong use case that can lead to high failure rate and this risk of overinvesting. But there are three key things which I feel are essential to reduce that risk. So first, as Nitin mentioned, you got to front load the AI governance before you move into production and ensures collective governance, right? It includes representatives from business lines, internal functions, and not just the IT people. Then you select and prioritize the use case that you're investing in based on what your AI ambition is, and most importantly, human in the loop, so that you are mitigating the risk of hallucinations and biases.
I think Priyanka has already covered most of the points out here. I don't think we are at a juncture right now where I would say that the banks are over investing. I think banks are cautious because there are some fundamental governance issues that banks as an enterprise and answerable to centralized authorities have to mitigate, right? And I think as this whole platform evolves around governance, we would see more confidence from the banks, right, in terms of investing rightly and investing heavily in these in AI technologies. The other aspect is that the promise that the technology has is phenomenal, right, in terms of productivity, automation, customer experience. And I think as banks, like I said, spend will follow the payback and the ROI in this case, because there is an element of cautiousness as well.
So, taking all these into consideration and hearing from everyone, can banks strike the balance between innovation and costs?
This challenge is not unique to the banks. Our survey actually find a third of the companies, the executives of those companies, worry about how to balance AI investment and other factors and other areas such as other critical growth and R&D, the product development, and also they worry about whether the return of the AI, of the innovation, justify the cost that they put in. So there's a clear challenge on maintaining this right balance. There's no one answer that fits all. One approach that we have been helping the companies to deal with this situation is to really develop a robust profitability analysis and establish clear performance matrix. Key strategy is to be able to decouple what we call run the business costs and expenses that are required to maintain the current operation versus those are used to grow the business investment. Have a separation of those two types of investment and expenses will help you to have a clear transparency on how's the cost be ramping, or are there any initiative you can use to reduce the cost to ensure that you actually keep the light on. And then you have the budget and more of buffer to play around with faster innovation or not investment on the AI side.
Well, I think that's a tricky question, right? Because you cannot attribute a cost to innovation. So when you set out to innovate, you don't know for sure like how much will it cost, how long will it take to succeed, when will you get the returns. So essentially, it is not a innovation versus cost trade-off, but trade-off between your current savings and your future competitive advantage. We see that there's ongoing cost optimization. Banks always want to save money, but you also see consistently growing IT budgets. So they're both a reality. Banks save in some areas, invest the savings in other promising avenues. Sometimes spending is often tied to economic cycles, right? Where good times are accompanied by higher spending on innovation and vice versa. But we feel that AI is going to break from this economic cycle because it is no longer optional. We have already spoken about the value that it promises, and we have already seen from our Gartner survey data that fewer banks are deploying technologies like blockchain, quantum computing, but AI has still been increasing consistently.
I think just to add to that, in my opinion, I don't think this is a question made for Gen AI or AI, right? This is a question made generally for banks which they grapple with every day in terms of being able to deliver the shareholder value on a quarter-on-quarter basis. And this is no different than non-banking enterprise like us. Banks have come to realize that innovation, they cannot stay away from innovation far away, right? That has to be imbibed as the DNA and as the culture within the bank. And you can't corner innovation in a certain segment of department or discipline in a bank, right? It has to percolate across the board. So that's where it becomes very important to think innovatively, yet to deliver the value to the shareholders in terms of increasing the return on equity and so on and so forth, right? So I think we will continue to see this playing, as a very fine balance, be it AI or any other technology. But I think with AI, the difference is that the technology holds a lot of future, and the amount of investment which is happening across the globe, be it on compute, model building, there's going to be a lot of use cases, ecosystem of companies coming in to solve these problems at scale. And that's where I think the real innovation will happen.
Thank you so much for joining us today, Nitin, Janet, and Priyanka.
Thank you for having us.
Thank you, the
It was
viewers, for
great
watching.
discussion.
Thank you for having
Thank you.
Once again, those were Nitin Sharma, partner and banking leader for ASEAN at IBM Consulting, Janet Tang, partner and managing director for TMT practice at Alex Partners, and Priyanka Shukla, senior principal for research in Gartner's Financial Services. For more news, visit asianbankingandfinance.net.